Welcome back to the Finance Corner. So today is Tuesday, August 27th. It is 9:51 in the morning. I am a little bit late to this trading session, but we got another trading session here, and yeah, we're gonna be trying to find some positions. Let's just go right into it. Um, yeah, let's see. Starting off, just doing some technical analysis here on the indexes. We have actually a very important report going on that we're going to get the data for in about 9 minutes. So, where is that? Today's Tuesday. Yes, so consumer confidence, as you see, is going to be a very important, huge impact on the market. They're expecting, our previous was 100.3 and they're expecting 100.9. So they're expecting an increase in consumer confidence. So let's see how this plays out, because if this does not increase and it actually goes down, don't think the market's going to like that. And so we can actually talk about the trade we have going on here. I have a swing, kind of like a short-term day trade swing on GJ right now. And I really should not even be in this trade anymore. I'm not even gonna lie, I'm kind of upset because we first found our entry down here. It was a nice sweep of liquidity during London Open, and it rallied almost exactly to where I wanted it to go. And now we had like a freaking huge pullback, me giving back 120, 115 pips. So that's not very fun, not very fun at all. But I did see that we have equal lows here, so I did set another re-entry point here. This is all before London. I went to sleep around London Open, like at 3 or 3:15, and I seen we have some short-term liquidity here. So I did get re-entered on the market, but now, I mean, I'm still bullish on it, but I needed to just continue higher. But I have a stop loss here at 190.30, and to be honest, I'm just gonna move all of them up to 190.30. 190.30. I'm gonna be upset if this actually reverses completely on me, and yeah, there should be no reason why I lose money on a trade like this. But yeah. Let's see, so it looks good right now. Um, to hold onto. Got a reaction. Let me actually send out this link here. Um, all right, all right. Sure. All right, all right. Sent that link out, and let's talk about some price action now, right? So let's talk about the VIX really quick before 10 o'clock, and then we can observe this price action. As we know, the VIX is a opposite correlation to the market, right? So when we see the VIX going up, we should see stock market indexes coming down, and vice versa. We see the VIX coming down, we should expect the market to be going up. So During the week of August 5th, earlier in the month, we had a lot of volatility. I forgot the actual event that was, but basically, yeah, you see, this is like very historical relevance to how high we went for the VIX. It's almost as high as we went in the COVID 2020 crisis. So, as you know, when there's huge volatility in the market like that, there's a lot of opportunities for traders. But just moving along, we calmed down a little bit on the VIX, and this calming down led to a huge run into the market to the point where it looks like it wants to take back almost its all-time highs. So can be expecting some, or I was expecting some bullishness, and we've been getting some bullishness on the market, and that's based on the VIX moving. So here we have the VIX kind of consolidating, but it's at like a kind of like a normal level. But I'm actually curious to see how it's going to react here. I think that the market is actually bearish. I was doing an analysis on it last night, and just based, it's going to be dependent on a lot of the data factors that we're getting, especially like today in 3 minutes, the consumer confidence. I just believe that we're gonna get a sell-off, though. That's kind of what my feeling is. I could be wrong, but let's see. So let's go into the 15-minute time frame now. Let's check out some price action. I want to actually look at the S&P. So this is kind of what I was looking for. What I pointed out yesterday, that there's this huge imbalance that is definitely a significant point of reference, because when we first came here and we sold off, this is like the first reaction or whatever. So this shows that the market is willing to sell off in this area, but we come back up because we need big money and manipulators to get in. So when they bring the market back up and they get in and they dump price again. So this is why it gives me this imbalance kind of important to me. So we see that it actually came into it and now it rejected it and it broke yesterday's low. So this kind of is already painting the picture that we're having a bearish day today. That's having the picture, painting the picture we have a bearish day today. So now it's just about following the order flow. So we had dropped down to the 15-minute time frame. We have London open back here, and then we rallied a little bit higher, and then we started breaking down. So let's see. Okay, this is interesting. We observed some liquidity here. Got some liquidity back into this area. So that is very interesting. I wonder if it's going to come back and hit that. So when we compare that area to the Dow Jones, slightly weaker, and compare that to the NASDAQ, slightly stronger. So it looks like S&P and the NAS is weak, at least for today. But let's see how we're getting this divergence. How this divergence is coming along. Actually, let me put that back. So we're actually getting a divergence. So if you look at the open price here, for the S&P, dumped. Oh, actually, we're gonna get we're getting the news right now. Let's take a look at what that is. Okay, so bullish reaction. Let's see, what was the actual number? Okay, so the consumer confidence. Oh, hold on. 100.3. There's no way, because wasn't that number a different number? 101.9. Previous was 101.9. There's no way they messed with these numbers. Because it was 100.3. and they were expecting an increase. But now they're saying that the previous was 101.9 and the forecast is 100.9, which means they were expecting a decrease, but it went higher. Hmm, that's very fishy. That's very fishy because I don't. I wish I can like go back in time. Like this number was not 101.9. Very interesting. All right, how is the market responding? So it looks like initial reaction bearish, neutral. I don't even know. Maybe neutral. All right, so we have the number now, and I don't think that there's any more significant news reports for the day. Australian dollar. But if we're looking to trade like the indexes, yeah, there's no more significant news reports. Let's check Bloomberg. Um, that's for the euro. We have 2-year note auction. Oh, at 1 o'clock. We have the bond auction at 1 o'clock. It only has two bills on it, so it's not that huge impact, but we could probably expect some more movement at 1 o'clock. So what this means is that now that we have the news out the way, we can actually study price action and see if we can find some entries. So I mean, I'm really not bearish. I'm not bullish though, which is interesting. That we got the report, and the report looks like it was good, which means the market would should like it, which means yeah. Let me think. If the consumer confidence is better than expected, then likely that means that the Fed is more likely to do an interest rate cut. Well, we already know that, but it depends on how much they're gonna cut rates. So as of right now, I wonder if the data changed this here. Yeah, so it looks like the chances of it getting a 50%, 50 bips rate cut is actually a little bit higher. I remember this was just at 70, and the current rate is 525. So we're definitely going to drop at least 25 basis points. But now we're looking at a higher chance of dropping even more. And maybe that's the reason why the market's like, yeah, pump this shit. Very interesting. Let me take a look at the yens. I need this to come back up. I need this to come back up. It's looking good for now. Um, yeah, it's looking good for now, actually. Let's see. Yeah, man. Yeah, man. We're gonna hold that to the moon, baby. So, see if we were trying to trade these indexes though, like how are we gonna do it? So ideally, my entry model is buys below open. Like if we're bullish, we're looking for buys below open price in bullish conditions. But I'm not. I'm a little bit hesitant. Well, you know what? If we're just still going strictly off price action here, we we do have a little development here. We can't ignore that. So on the Nasdaq, we have short-term liquidity being formed, and we sweep that shit at market open, and then we have the immediate reaction, right? So this is some clean price action actually going on here. How is everything else trading? So S&P made the lower low. Sorry, Nasdaq made the lower low. S&P did not, and US 30 it looks like it's trading with some conviction to the upside. Definitely looks like it's trading with some conviction to the upside. This is kind of ugly though too, but you can see the pattern still holds like low, then we sweep that shit, then we come back up. mitigate out of that and we start breaking higher. Um, it makes sense actually, but I want to see if, for me to take a trade though, I would need to. I like pullback trades. So if it's something like this kind of looks like the more opportune moment for me. I want to see it pull back into the 50% area, like really anywhere in this area and below. If we can get in there, and maybe on the 1 minute time frame, get some type of pattern, some type of reversal pattern to the upside, I would not mind entering this, even though I'm holding a bunch of day trades, because it'll just be a short term scalp. I would look to enter in here and then maybe take profit around this high if we can get back up there, or even higher, But that would be about 100 points on the Nasdaq, which is more than enough for me. It's more than enough for me. We don't need that much. I'm not actually like a swing trader, so not every single position has to be a swing. Let's take a quick look at currency. I haven't looked at currency in a very long time. So starting on this weekly chart, I had just doing some previous analysis here. Equal lows, market swept it, started forming higher lows, but we actually came back now. So it's actually another development going on. Can actually get rid of this stuff, because we actually, it looks like we took out this low. So that trend line that tried to form is not really relevant anymore. But we can just see the dollar. Let me get rid of this. The dollar is kind of just trending down, or it's theme. It cooled off its theme from its run back in 2020, and now we've just been kind of chilling out, and it actually has been forming lower lows. Sorry, lower highs, and maybe now it's forming lower lows. But so we got a low here, low point here, 2023 October, April, June, and we just keep getting lower. And we actually took out this previous low point here. So now it's just about you know, how low can we go? I think What's It Called made a song about it. How low can you go? How low can you go? How low can you go? Right? So yeah, gonna be expecting, or at least not expecting. We have to react to what's going on with the dollar. But based on the consumer confidence report, I mean a strong report. I think that would indicate, if the consumer confidence is strong, that must mean that the currency is strong. I think that's what it's going to say in here too. Actual better than forecast. It's good for currency. So we got that here. So maybe the dollar can introduce some bullishness um, today. And if we take a look at just the 1 hour structure, we're forming some structure here. Check out this previous low, but we are now forming structure here, consolidating a little bit. Looks like price really slowed down. So we're coming up right now. I wonder how the indexes are going to be reacting. Back to this 5 minute chart. So I like to, when I'm looking at for my day trades, I'm like all over the place. You know, not really, but I know exactly what I'm trying to look for, and I want to see how prices observing are moving around these areas and these times, because New York session that's where the money's made, man. New York session is where the money is made. One thing I could have did. There we go. Set an alert. I'm gonna set an alert at open price for Nasdaq. I think Nas could be the one with the most potential for upside. Like if we are gonna take a bullish position, I think Nas does have the potential. And I mean, if you're looking at it objectively, this candle here is an engulfing candle. That is an engulfing candle right here. All right, we're moving now. We're moving now. So this is why sometimes trading is just all about patience. We could have chased this chart, this price here, and like entered, but it's like, where would your stop loss go? Like it would have to be like down here, which what, 60 points? That's ridiculous. And then what, you would target like right here, right? So that's a 1-to-1, but that's not how I like to trade. It's too risky, too much of a wide stop loss. Like I would have wanted it to come down here, and then I get my entry here and put the stop loss right below where the liquidity was swept, or maybe even a little bit lower. Give myself some room, and that will be my ideal entry to take it back to like right here. See, you got a 1-to-3 right there. Beautiful, beautiful shit. But it looks like not much we can do right now. Let's take a look at gold. How's gold trading? So let's start with this weekly chart. Oh yeah, I was doing an analysis and breaking down what was going on with gold. We can get rid of all these drawings, but basically, from a fundamental perspective, gold is bullish. It's because of all the um, excuse me, the war developments that are going on. And when we usually see commodities have a rise as an uptick during like these hard geopolitical times. During times of war, there's a lot of uncertainty, and when there's a lot of uncertainty, people tend to flock into safe haven assets. The number one being gold, which is why you see it's been having the run of a lifetime here. Let's see, how much is it up this year? Gold opened up right here. Gold is up 23% in the year so far, which really is a big deal. Because if we check out historically, gold investors don't usually do that good in the short span of time, because gold is just not a volatile asset like that. So the fact that it has been as bullish as it has been means that we just kind of follow what's it, we have to follow through with what it's been doing, which is going up, quite simply put. But one thing I was pointing out yesterday on the structure, or on the my market review video, was the structure is very much clean though. Like we we can make a point of resistance, like right here, right? It can look like the market's gonna sell off, and then boom, it just goes right through that, cleans up a little bit, breaks higher, and then we have the same exact thing here in the form of these low resistance highs. Market pushes straight through that shit, come back, well, and then while it does that, makes the imbalance, comes back and cleans that shit right up, and it looks like now we're going to break higher. It's like now we're going to break higher. So how is gold trading? This might be an opportunity, if I was willing to take a trade on it. Honestly, not willing to take a trade on this just because I'm holding this GJ position. Like I'd much rather like just put my faith in this, not even have to worry about pressing another button, and then just make my money back. So we can actually talk about my challenge real quick. Currently, I'm in a phase 2 challenge on the funded 50K challenge, and I'm on a phase 2, which means that my goal is to make 5%, which on a 50K account would be 52,000. I have to get this account to 52,000 equity, but we are in drawdown right now. Let's see, we did a lot of dumb shit last week, and that's really just me rushing the process, really, because like as you see, we have a couple good trades here, and then just a lot of dumb shit that just adds up to be a huge loss. So trying to recover from that. So in order to not put myself further into drawdown, I only want to take trades that I have 100% confidence on. That being said, it really doesn't look too bad if you're a gold trader to to take this or to take this trade, because we have a liquidity sweep here. Let's see, where is London Open? So London Open happened. We ran down into liquidity, and it looks like we formed a higher low. How is silver trading? Okay, silver manipulated more to the downside. So there's actually strength in gold. And then when we took that low, came back, market doing its thing, and then we have 9:30 open, which is here, and that is introducing our bullishness. That's a great trade on its own. We got about like 10 points or 100 pips from here, and then we pulled back. This 10-minute candle is definitely your entry point if you're allowed to trade news. Interesting. And then, yep, market is just taking off. Market is taking off. Another thing here is the reason why this is a good entry point is because this imbalance. We have an imbalance followed by a wick that fills it. So that tells me we're likely not going to be trading back down there. As far as targets, if you enter this trade, let's see, you can probably go for, depends on where you entered, but let's say you actually caught the imbalance at 210, 2510. Stop loss will be around here. Not that high, right? Maybe right here, and then you can target right here. That's about your 1 to 2.8, or you can go for the next high. And what is that? That's your 10 points or 100 pips. Nice, 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 nice. So it looks like we're back to the divergence on the indexes. Back to divergence on the indexes. Look at this shit. This is the reason why I'm not so eager to press buttons. Like, Nas was bullish. So is kind of the S&P. But then US 30 was trading strong, and now it's not. Maybe we're bouncing off this institutional candle here. Maybe. We gotta check how the VIX is going. Okay, the VIX looks like it wants to come down. Oh, this is interesting. Technical analysis on the VIX, right? Who does that shit? High, swept the high. This really could be coming back up. Oh, this is the weekend gap. Oh, that's not weekend gap. This is the weekend gap. So yesterday and Monday we did these short-term highs. Gap market actually took that, and now it's running down. So are we bullish on this? It looks like we might actually be bullish on the indexes, because it looks like the VIX, for now at least, it looks like it wants to come down. So maybe we can expect it to trade into this low resistance liquidity here, which was actually, that's going to be a pretty decent move. I said be a decent sized move on the indexes here. See how that plays out. And crypto crypto has been dumping. It's like taking a shit. Crypto is just like another risk asset. So it's from a technical analysis perspective, it's really just filling in this gap. Let me actually go to an even higher time frame. See what this monthly is saying. So it looks like it filled in this this gap here from February 2024. And this is a lot of consolidation actually. March, April, May, June, July, August. We hit 73 and then we kind of just been chilling there though. ETH is a little bit more reactive and so is everything else. So Bitcoin is actually holding up the strongest. Wait, what was that? Binance coin? Or is that Algorand? Binance coin is actually holding its value pretty good. And that's actually, wow, it made a new all-time high. That's interesting. It's actually interesting. But for Bitcoin, yeah, it looks like it could be coming back up on the long term, for the long term. But as for the daily and the weekly charts, it's definitely in a corrective phase, and we can probably expect it to fill in this imbalance here. So maybe a little bit more downside, maybe a little bit more downside, but nothing tradable for me at least. Nothing tradable. Got some fractal highs. All right. Let's see. Are we really just gonna do that? Like, wait, why can't we get the pullback, man? Like, make it make sense. Maybe that's something I can do as well. So while we're here, we can talk about some some news, not news, some events. Like story articles. I gotta get my Wall Street Journal subscription, and then we can look through some articles while we're waiting for some price action. That definitely sounds like something we should be doing. As far as this trade though, it's it's giving what it's supposed to give, right? So the market, like it really should have just took me out from up here. I don't know why we had to go 10 pips shy of my target, but maybe it's another opportunity to go even higher, hopefully. So what we're looking at is that pullback, and we got the juicy reaccumulation structure on the 15-minute, and now hopefully the market can come back up and rally up to multiple targets, and then we can pass this challenge. Yeah. Um, I'll say that's about all I'm looking for. I don't see any trades. Okay, so the dollar actually, that was a false candle going back up, or actually coming back down. And we just formed some equal lows. It's likely to get met at some point. So bearish dollar is going to be bullish for foreign currency and slightly bullish for the indexes because it's not a one-to-one correlation on the for the dollar and the indexes. It does make sense on a logical perspective though. Like if there's outflows from the dollar, meaning that the value of the dollar is going down, that means there has to be inflows somewhere. Like that value has to be going somewhere, right? We just have to find where that is. So typically it would be into assets, so like gold and the stock market indexes. But it's not always a one-to-one correlation. Like if you see the dollar going down, it does not mean that gold is going up and the indexes are going up. Even though that's kind of where we're at right now, that's not exactly what that means. But you can take that correlation and stick with it on the currencies. Like if you see the dollar going down, you can 100% expect the euro to be going up. So is the British pound and Australian dollar and New Zealand dollar, and same thing. Like if you see something starting with the dollar, you can expect that to go down. Like USD Chef, it's going down. You can expect USD CAD going down, USD JPY. So it makes sense from like a logical perspective, because and that's really all we have to do here as traders. We have to make sense of all of this all of this bullshit, right? But it's funny to think about though, like it is bullshit on a chart, or we can look at it as just bullshit on a chart, but like it really represents a lot of things, like these price fluctuations. It represents like people's emotions as well, if you really think about it. And it represents like not only the market swings and the market trends, but like people's emotions, how they react to certain areas. And you can just tell by that, by the volatility. It's almost like the price movement, it tells us a story. And all we have to do is pick a point at which, hey, I think this story is going to take a turn here. And then that's your trade. That's all trading is. You know, it took me a while to try to really put trading in a basket where I understand exactly what I'm doing. And that's pretty much it. Like, you have to keep things simple. The more simple that things are, the more easier it is to be on your mental, because trading is very much a stressful thing, or it can be 100% a stressful thing, you know? So, yeah, that's why I'm not really pressed to take a position. Again, mostly because I'm holding a position already on my GJ. It's just a matter of having time play it out, you know? But we did point out some good positions that we could have taken if we had the ability to. Like, I wasn't necessarily bullish from this point, but it did bounce off this institutional candle here, US 30. So if you mark that out like I did here, this could have been a very good entry point. Just using that institutional candle as your entry point, and then maybe that's actually pretty tight, so I'd put it down like maybe like 40 pips, 40 points. And then I'd target, to be honest, let me think. If I was in this trade, I might actually target a fractal high, which would probably be up here. Yeah, I would target that. See how that plays out. But you'd be pretty much very close to target at this point and pretty much done with that trade. So it does look like the VIX is coming down, which is why we're seeing the market shoot up. And that's probably why, or that we're expecting the market to probably go into uh, this liquidity pool here on the VIX, which that is very much going to justify going up here as a target, and for the S&P to hit its equal highs target. Yeah. Yep. Took a short-term low accumulation underneath that low, shoot price higher. Yeah, now it's just a matter of letting price get here, and that would have been the ideal trade for the day. The one thing I was potentially looking to take, like I wouldn't mind taking it, is if this pulled back. If this did pull back into here, I would have took that trade. But that's I guess I'm asking for too much. we're getting some very clean price action this morning. Getting some very clean price action this morning. Took out that low. Like if I can't really find a way to justify entering this trade, um, or just based on the price action we have here, I can't really justify entering it. Um, because remember, before 10 o'clock, we were waiting for the actual report, the number. So buying underneath here, um, you know, you'd have to be risky. You'd have to be ballsy to just buy underneath here like that. Let's see. If we look to the left, is there anything to the left? So not really. Maybe just these low resistance lows here. Low resistance lows. Market took all of that. So maybe you can use that as your justification. Like, yeah, that's a good buying entry. But then again, if you bought down here, your stop would probably just have to be like right down here. Maybe a slightly wider stop. But if you were ballsy like that, that's how you could have positioned yourself into this trade and just ride the whole shit for about 170 points. Very nice price action. Very good. Very good. Back to this 15-minute chart. So yeah, again, just a quick learning moment. Like when we have a engulfing candle like that, especially during times of volatility, like New York Open or New York Session, you see that this candle, this green candle, it engulfs this previous candle, which means it took out the previous candle's low, and then it closed above that previous candle's high. So that is the definition of an engulfing candle. And so when we have something like that, it kind of just shows that the market has a strong willingness to go higher. And that is exactly the price action that we get. So I mean, I guess just based off that fact alone, like maybe after 10 o'clock, you could have just bought in here. But like I said, like I was explaining earlier, if you did just buy here, you'd have to make a wide stop, and I don't really like doing that. I don't like doing that. So yeah, that engulfing candle is definitely your signal that price is going to be going higher though, and we're getting exactly that. How's the yen's trading? I hope it's coming up. All right, beautiful, 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 beautiful. So we get to hold on to this trade. Get to hold on to this trade. I love it. Let's see. Anything on stocks? Anything crazy happening on stocks? Not really. My watch list is pretty calm. Eli Lilly. Oh yeah, and we have Nvidia earnings this week. So in like 2 days. I'm very curious to see how the market is going to react to that. I'm very curious to see how the market's going to react to that. But as of right now, today, 10:30, market's looking pretty good, man. Market is looking pretty good. We might get a pullback here. This trade looks like it's done. But also, I want to I want to see how price looks like if we do pull back here. But let me get rid of this, and I'll just keep that limit open. Not limit. I'll keep that alert active. See what it looks like. So, okay, we're getting some pullbacks here. This would be another trade on gold you could have took. So we got an imbalance here. I want to see what the price is going to do in this imbalance. We're just going to fill it, or we're going to go through it. We're going to bounce off of it. So you see this imbalance is based on this one-sided price action candle here. And we took short-term highs. Let's took these equal highs. That's our liquidity. Now the market goes from outside liquidity to seeking inside liquidity, which might be around here. So yeah, I mean, I'm not really looking to take any more new trades. I'm just gonna be holding this GJ position, and we're gonna be holding it to. I have a target. I have a target of 192. So I'm gonna take profits on these two positions up here, and then I'll hold the new position for if it goes even higher, because we may have found like a good potential swing, to be honest. Oh, this is a old limit that I can delete. And yeah, we really might have found a very good position to hold for the upside. There's a lot of potential here. So I'm not even going to do too much. I'm just going to be holding that. But I think with that, I'm going to shut it down. That's pretty much what I have for you guys in terms of this week's or today's live trading session. So we'll be back tomorrow. Gonna be here earlier, like around right before market open, 9:20 ish, and see you guys there. Thanks for watching. Peace.